Hi guys, welcome back to the channel. Today I'm going to be sharing with you how to deal with trading losses. So I got this question the other day from Siwei, right? And I think what was really interesting about this question was that most people like to share about their wins, but nobody likes to share about their losses. So an adage I always try to live by and how I deal with this question is that don't let the win get to your head and don't let a loss get to your heart. So what does it mean, right? Like in social media, you don't let compliments rub your ego, neither do you let the naysayers put you down. Same thing with trading, You don't really take every win, to your stride and like, hey, I'm the best trader alive. No, that's not how you should deal with it because everybody can also lose. Likewise, when you start losing or you're on a bad down streak, instead of beating yourself up over it, try to figure out what's wrong, So I have these 3-step solutions to figure out how you deal with this kind of scenarios. The first is to understand why you lost, right? A lot of people just like keep losing, but they don't stop. I think you should stop and understand why you're losing. And number 2 would be to analyze your situation, your family conditions, your financial situations. Some losses are hard to recover from, Don't ever put yourself in those kind of scenarios where, you have to think of your next meal. That's not how you should be trading. You should only be trading when you're have a little bit of financial independence, you have a stable income. Don't quit your job to go into full-time trading, right? Last but not least, don't forget to execute the change. Find out what's wrong, analyze the situation, and make those changes, right? Okay, so step 1 would be to acknowledge that there's a problem. A lot of us have this misconception that, hey, I'm just unlucky, the stock market is out to get me. I think that's a very fundamentally wrong way to look at things because there's always consistent winners. I know of traders who are consistently year on year beating the market. And you need to realize that the market is a zero-sum game. For every winner out there, there's a loser. So do you want to be the winner or do you want to be the loser? What do they have that you don't? Perhaps it's information asymmetry. Maybe they do know more things than you in terms of fundamentals, technicals, or they have some inside news, These are things that you can arm yourself with to make sure that you can navigate this market successfully. Alright? Some questions you must ask yourself is, was there something that you did wrong? Was it your leverage, A lot of people don't realize, right, but the higher your leverage, the less room for error do you have, And most traders who open up 3 to 5 times leverage or even 10 times leverage are much less successful than those who open up 1 to 2 times leverage. So make sure that if you're not sure what you're doing, don't over leverage, That's a very wrong thing to do, right? And is there something wrong with your entry or exit? Perhaps you could be more patient with waiting for entries. Perhaps you could be more patient with waiting for exits. And these are questions that you must ask yourself. Is there something wrong with your risk management, Are you risking more than you are able to stomach? That's the thing that a lot of people don't realize, that if you can't stomach the risk, you don't have the emotional resilience for it, you can't hold through the position and the idea throughout fruition. So do you do your due diligence as well? Do you really research this company to be fundamentally sound? Do you know it in and out? Do you check whether it has proper cash flow? The last thing you must ask yourself is, are there any behavioral biases wrong with you, right? Not saying that you have anything wrong, but a lot of us have this kind of psychological biases, right? Like we mentally account for differences, and we have a lot of poor framing, or we have loss to gain or gain aversion. Now, what does this mean? A lot of us try to treat our losses much more harsher than we treat our gains. Or do you have this tendency to roll your profits? What does it mean is that if you are already making profits last year, like last year I did $500 to $500,000 challenge, right? And I managed to do 1,000 times on my portfolio through it, a bit of luck and a bit of skill, but after that, do I compound these profits? No, you don't, because you need to make sure that you are able to internalize these profits, you're able to diversify your portfolio, and also you can't treat a larger sum the same way you treat a smaller sum because there's a lot of liquidity issues, there's sizing issues. When you open up larger contracts, you have more issues that you'll face in terms of filling your bids. Alright? Then the second step you need to ask yourself is, do you have the emotional capacity? We all experience ups and downs in the market, but depending on your background, you might not be able to handle it. Right? Let's say you're a student, you have nothing to lose. You can be more speculative than the retiree that's 60 years old. You should be more putting into more stable stuff like bonds or indexes, or even some stuff like staking or farming, yield farming, right? So I think that it's wrong to have no exposure to the market, and even if you have gone through some losses, what you can do instead is to put into safer assets and reframe your thoughts and then try to figure out what went wrong, and also just spend some time learning more so that you're able to go back into it with a much better mindset. Right? So my own personal experience is that depending on your background, like in the past, even though I had many opportunities to invest earlier, I wasn't able to because I didn't have the financial capacity for it. It really depends if you're an adult with kids, you have a stable income, you have flexible income, or you have cash flow coming in. Once you have that, then you're able to manage your portfolio better. I don't want you to ever be in the case where you are thinking of your next meal, right? Like I mentioned. So you gotta decide what kind of types of trader you are gonna become after that. If you have a full-time job, perhaps go into more position or swing trading, which is taking a week or a month for your positions to fully fulfill instead of being a day trader. That's a lot more speculative. You require a lot more emotional resilience, and you have to watch the markets daily. That's not something I would want, right? And from my own personal experience, even though I did make money last year, there was a lot of ups and downs along the way when I grew my portfolio as well. I will share about it in a later date, but I've also been liquidated multiple times. Liquidation means you've gone through a margin call. So in the past, when I looked through my emails, in 2019, I got liquidated 3 or 4 times. And that was when I had a smaller account. I was just trying out $500 to $1,000. I was practicing out my futures, my option strategy. And it took a lot of back testing to get to this stage. But the question is, if you're not very good, should you even be trading on futures or options with leverage or margin that you don't own? Perhaps it would be better to start with a paper trading account and then slowly grow into a small account. And after you really know what you're doing, then put the full load in. In the meantime, if you have money to invest, you can put them in safer assets like bonds or staking. Or you can even, if you need some personal advice, you can reach out to me in the direct messages and I'll try to help you out if I have time. Alright, step 3 will be to decide what you're going to do about it being your flaws, right? Once you realize what went wrong, then decide what you're going to do about it. Let's say you're weaker in terms of fundamental analysis or technical analysis, then spend some time learning about these kind of things. I think that you don't need to be a degree holder. Like personally for me, I'm not someone with a finance master's. I just graduated with a finance degree from SMU, right? But that gave me enough information to arm myself to navigate this space, right? Learn about earnings per share, your books to share ratio, your price to earnings ratio. All of this stuff is important for you to understand whether a company is the right investment. Above that, you need to learn some technical analysis, whether it's very overbought or oversold, whether the volume indicators, what about the price indicators, are there oscillators, stochastic indicators, moving averages. Know all this good stuff, but before you go into technicals, make sure that the company or the stock is fundamentally sound first. So I think you need to learn these 2 things, pair them well together, and you should be a good investor after that. Of course, above this all, you need some emotional resilience, and that comes with time and experience, right? So the last thing you ask yourself is, are you just starting out or do you just got burned? Like I said, if you just got burned, I think it's wrong to be fully out of the market. I think it's always okay to put some into safer assets while you learn and re-internalize your situation and try to recover from it, right? It depends how the extent of your losses. Are you in the state where you have to think of your next meal? If you're in that state, it might be better just get a job first, and in the meantime, just keep learning and growing, right? If you're just starting out, then do a paper trading account, watch my videos, check out some free resources. If you want to check out my referral links on my trading guides or my Telegram group where I give some guides as well, you can check out the link in bio. I put them in the description there. And always remember that time in the market is better than timing the market. Always have some kind of exposure, be it safer or more speculative. I always feel that there's an asset for somebody out there, no matter your age group. It's always important to learn financial independence and how to manage your wealth, right? So in summary, don't give up, These are the 5 summarized points that I have, right? First of all, don't bet the farm. What this means is, don't put your whole mother load in something. Unless it's something safe like an index or a bond, you can put a higher proportion of it in there. Number 2 will be to find out what works for you. Some people are better trading crypto. Some people are better trading Forex. Some people are better trading stocks. Personally, I do stock options. I do futures on my crypto. And I only do Forex in terms of how I park my money, right? It depends. Why is Forex important? Like I have to mention this a couple of times, but basically, right, a lot of people don't realize that a lot of US stocks are denominated in US dollars. So you should at least know, right, the currency conversion between USD and SGD. I can tell you off the bat it's around 1.35. If there's a lot of interest rate hikes, you need to be wary of this because a large movement in this currency pair can change your whole net worth by a lot, right? So learn how to move your money as well. I'm sure the wealthy know how to move their money, and they even know how to move money through NFTs as well, across borders and everything else. But these are things that I will go into in greater detail in further videos, right? Number 3 will be to learn. We can always learn more. Like I've always been an advocate of lifelong learning. Like no matter, even if I graduate from university, even if I'm not going to pursue masters, I will still be reading a lot of books and trying to understand the markets better, because every few years there's going to be a new instrument. In the past there was no options, there was no futures contracts, there's no forward contracts. Now there's so many more instruments, there's so many more derivatives. I constantly find myself enjoying this learning process, and I think that it's important that each of us try to make sure that we are armed with the right information before we proceed further, right? Then number 4 is that always try with a paper trading account first. If you come up with a new strategy, like let's say you found out something cool, wow, then try with a paper trading account first, That's what I personally do in the past. I found out what worked for me using a price indicator combined with a volume indicator, perhaps. And number 5 is no matter where you're in life, just keep moving forward. I've lost many times in my life. I'll share in greater detail, of course, the extent of my losses. But each time I got liquidated, I've had my net worth go down to 0 2-3 years ago as well. But with each loss, the worst thing you can do for yourself is to not get back up. Because you'll never get back up if you don't even try, right? I think that you should not have this thing called like a snake bite. Like you are too scared to go back into it because you have lost. But that's not the right frame of thought. You should be thinking about how do I do it safer? How do I do it better? How do I constantly improve myself, right? So with that, I will conclude this video. If anything else, remember to like, share, and subscribe. Check out my links in bio, and yeah, thanks for watching. Bye!